much for joining me on my first episode of Money Foodies in Depth, where we'll look into specific companies that I'm passionate about. I'm going to also do other series on food, personal finance, etc. If you have any ideas for me on companies you'd like me to look into or other topics, please leave them down below. For today, I'm going to look at Tesla. And it's important to note that I am long Tesla. But I'm going to look at the yearly production and delivery numbers that we know. And now that we have all of Tesla's came out with their numbers on January 2nd. So a little while ago, and I've done up some numbers and I'd like to share them with you. And taking a look at the yearly, they've had year-over-year growth in their Model X and S sales. They've had incredible growth for year-over-year 44% from 16 to 17. And then you go to 18 and again, amazing growth, 3%. Quite incredible. And now let's look at the Model 3. And that Model 3, as you know, is a cheaper car, lower end of the market, and higher demand. And people just love this car. They're willing to trade in lower price cars when they haven't been maybe a premium car buyer before. They're willing to pay more of a price. There could be a lot of factors. Safer with the autopilot, and it's the safest design. Both together make this car one of the safest cars you can buy for your family. That could be one of the reasons that people are driving to it. Also, it's better for the environment. Can be also cheaper to operate depending on where you live, your costs with maintenance, and your time frame horizon that you analyze it over. An electric car can often be your cheapest option, even at premium prices. So, taking a look at the Model 3 numbers now. They had, very low numbers in 2017 because they're just coming online. They were starting production hell, and they only started producing in July 7th of 2017. So not a full year of production, only part of it. And took them time to iron out the kinks and come online, and they're still ironing out some of the kinks now. But still, 2018 was an incredible year. They became, as the industry likes to call it, a real car company. They were a real car company before, but they became more of a mass production car company in 2018, and that's only going to grow from here on in, most likely. They have very little competition outside of China as of yet in this market space with the disruptions that we're seeing. And taking a look at Model 3, 2018, still with not finishing the ramp, incredible sales figures of selling 150 or producing 152,977 vehicles. And looking at their total sales growth rate year over year, quite incredible still, 152% year over year from 17 to 18, and still an exceptionally strong from the previous year of 48%. And there's a good chance that we'll see credible growth in 19 too. I did a very conservative estimate later on that we'll take a look at. And let's go to average weekly production. Average weekly production, it's been quite solid for the X and S. It's been quite steady. So over the last couple of years, between, let's say, 1900 and 2100, they've held pretty consistently, except for a time when they were ramping up the Model 3. Quite good. Now let's take a look at the Model Y coming in. Really fast growth rate. When you take a look at this, what does this represent on a percentage basis from the point of time that they started? 242%. Overall yearly average weekly productions. Now, where will this go? I expect it in the not too distant future they'll be at their 7,000 cars per week. Tesla's indicated that they can get there with very little capital spend. They will have to spend some capital to get to their goal of 10,000 cars a week next year. They did not say how much. The goal of reaching that is around mid-year next year. Or, not next year, this year, 2019. Sorry. And then we go into deliveries. Deliveries, again, as you saw from the production, not surprising. They're more demand than what they can produce. sometimes a little bit different because of how they measure deliveries, and also that they do need some inventory at their at their stores for people to test drive. So take a look. Looking at these, these are quite phenomenal numbers. You always have to remember you can't compare these delivery numbers reported by Tesla and a delivery number reported by Ford. They are not the same number. Tesla is much more strict in how they define deliveries. Deliveries, all the paperwork has to be checked off. It's when it's delivered to the final customer. Whereas Ford has, when they created it was a good thing, but now it's an outdated system of selling cars. They have this dealership network. You take this car to the dealership, and it might get sold right away. It might get sold in a few months. Hard to say, but it it that dealer needs to get a rate of return, even though it might be on the books of being sold by Ford corporate. The dealer hasn't sold it yet. So in the whole supply chain costs, it adds cost to the dealership network. The advantage Tesla has over these traditional automotive companies in the US is no dealership network. That's a huge advantage, contrary to what a lot of you hear on the media. And going into their in-transit numbers, these are they're for the whole world, not just the US. But we got on during the last earnings call, Q3 of 2018. They had some pretty good improvements in their delivery statistics internally, they said. So they kind of noticed after as the ramp up of Model 3 production has been kind of leveling off, they were getting out of hand on how long it took to get, and it was costing a lot of money to get cars to the final customer in the U.S. And it's about, every day is about, I think Musk said was about $70 million back then in Q3 earnings call per day for production costs. So 75. So that's a fair bit of cost for working capital, interest on it, etc. And banks are only willing to loan, I believe, up to 85%. So that's a cost to it. And they've got that number down during that earnings call from 30 days in August to 20 days by the time the earnings call. A goal of the end of Q4 was 10 days within North America. Overseas market, they're trying to ship cars as fast as possible to get it to market. And, it looks like these numbers have come down that way. And I expect them to go back up because they are starting in Q1 of 2019 to ship overseas. So those numbers should get worse again, but the overall supply chain management and logistics has improved with the company. Tesla's bought trucking companies. They've signed good long-term trucking contracts with truckers. So it's improved, and I expect this to do even better for the margin. One of the reasons that likely they were able to reduce the price of the cars to their customers was because of efficiency gains, not because they would have trouble selling the cars. They have more than enough demand. They can likely sell everything they produce, but they will. But they have been able to drive down their cost per unit enough that they have been able to reduce their prices. I believe we'll have to wait and see what we see in the Q4 earnings call. But that's my hypothesis. And yearly deliveries, again, quite stellar. Strong over the last couple of years, Model S, strong for the Model X. And then, of course, the real story of the day for Tesla is the Model 3 production ramping increase. With the Model 3, it increased sales of 138%, allowing them to produce more. Year over year, 17 to 18, and I'm expecting a very conservative 67%, 18 to 19th, and likely it will be higher because this is not assuming that they meet their targets on their average weekly production rate. So we will look at what's going on in the future. Well, they've broken land for the China Gigafactory 3 in China, and that should be online at the end of this year, according to Tesla. And I expect that they'll likely be close to their target. China's quite known for being able to build things quickly and efficiently. And this is not something new for Tesla. They have an operating mass production facility in the US. They have to replicate it, not figure out how to do this new in China. So I think stress over it, and even if they're a little tiny bit late, won't matter. Tesla Semi's coming online 2020 likely, new Roadster, and also the Model Y and the truck. Roadster 2020 likely, I believe is what Tesla was saying, and Model Y, towards 2020 as well. Truck hasn't specified, but it's at the high end of their priority, whatever that means, according to Musk. So I wouldn't focus too much on it, than knowing that it's likely on the not too distant far future in the next couple of years. Maybe we'll see it. Maybe so. And Model Y, with their release date, we should get more information about it around the Ides of March, according to Musk. And year over year perspective in the US and how well they're selling. With the Model 3 coming online, quite amazing. They're the top growth in the United States out of any car company, blew all the others out of the water. And how does it look year over year comparing December stats? Well, they didn't have one car in the top 20. 2018 December, they were 12th place, and they haven't even finished their ramp. Who are the top 5 cars? What are their vehicles made? Well, it's a truck, crossover, and crossover for the top 5. So as they come out with their truck in the future and their Model Y, depending on the price point of the truck, it might be one of the better selling cars in the future, but it's very safe to assume that the Model Y crossover will outsell the Model 3 and be one of the top vehicles in the United States sold. So it's likely a safe assumption. So and be quite profitable for the company as well. And right now, without hitting peak production for the Model 3, they are the 4th most popular car in the United States. As Inside EV Vehicle shows, they are the top 3 most popular cars in the United States that are plug-in, with a cute little battery beside the plug-in cars. So, and growth year over year for their luxury segment has gone up 18%. So believing that with the Model 3 coming online, it will destroy their luxury segment seems to be false as well too. So that's kind of a bit of bullpucky. And another good chart if you're looking at buying EVs, I'd recommend going to Inside EVs, and you can kind of compare and see which is the cheapest cost per kilowatt. Does not say safety. Tesla is the most safe vehicle that you can buy right now. They have the top 3, I believe, and yes, the top 3, and they also have the lowest cost per kilowatt. This does not talk also about battery efficiencies, engine efficiencies, battery cooling, and stuff like this that the vehicles have. But overall, it's not a bad starting point. And being in Canada, range is important, so dollars per kilowatt hour is important to me. And please subscribe if you would like to see more videos along this line, and anything else you would like me to look into, please let me know, and I'm always open to some good constructive criticism. Thank you very much. Bye.